When is the best time to invest? This is a question that has been asked for a long time, and the answer seems simple: when prices are low. But it is very hard to try to time the market by waiting for the best time to buy or sell an investment. There is a tried and true method that can help you buy more when prices are low and less when they are high. It's called dollar cost averaging. What is dollar cost averaging? Dollar cost averaging is the process of investing a fixed amount of money every month, no matter what the price of a share is. It's a good way to get into the habit of investing with discipline, make your investing more efficient, and maybe even reduce your stress and costs. Say you put away $100 each month. When the market goes up, $100 will get you fewer shares, but when it goes down, it will get you more. Over time, this strategy could lower your average cost per share compared to what you would have paid if you had bought all of your shares at once when they were more expensive than average. As you can see above, dollar cost averaging allowed our hypothetical investor to take advantage of a price drop in month 3, which greatly lowered the average cost per share. Even though the investor paid $4 or more per share in 4 of the 5 months, the average price per share was $3.70. And he was able to buy 135 shares. On the other hand, if all $500 had been invested in month 1, the average price per share would have been $5, and there would have been a total of 100 shares. In a perfect world, the investor would have put all of the money into the stock in month 3 and walked away with 250 shares. But there was no way to know ahead of time that this was the best time to buy, which is why dollar cost averaging is so helpful. If you invest often and regularly over a long time, you're less likely to miss out on those chances to buy. Benefits of dollar cost averaging. One good reason to use dollar cost averaging is that you might be able to lower your cost per share. However, there are other reasons to use dollar cost averaging as well. It teaches you how to invest in a smart way. Even if you know you should invest regularly, it can be tempting to spend the money you were planning to invest on other things. If you set up regular, automatic contributions, you're less likely to forget about the money you invest, more likely to get in the habit of investing, and more likely to stick to your plan. It keeps you ready for chances. Even for professional investors, it's almost impossible to time the market by trying to figure out exactly when it will reach its peak or bottom and then buying and selling at those times. Dollar cost averaging helps make sure you'll be there when a good opportunity comes along. Recent events show how important it is to have a steady plan for investing. If you stopped investing before the 2016 U.S. election results, when uncertainty drove markets down and prices down, you might have regretted it when the market went to record highs in the days after the election. Minimizing regret. Dollar cost averaging might also keep you from letting your feelings hurt your portfolio. If you put a lot of money into a single trade, for example, and that trade doesn't work out, you're more likely to feel bad about it. Behaviorist economists say that most people are naturally loss-averse, which means they react more strongly to losses, or the possibility of them, than to gains. But if you use dollar cost averaging, you invest smaller amounts of money over time, which makes it easier to deal with a bad investment. There's also anchoring bias, which is when an investor won't sell an investment bought at a historical high because he or she thinks it's still worth that price. By putting money into a position in small amounts over time, an investor may be less likely to get stuck on a single price. This makes it easier to buy and sell according to a plan. My name is Cryptomandin. If you liked the video, be sure to subscribe to the channel and smash that like button, it will be highly appreciated. I will see you in the next video. Goodbye and take care.